When we look at Oklo, it feels like one of those companies that could redefine the entire energy industry. They're not just talking about building another power plant, they're talking about changing how the world thinks about nuclear energy. Their promise is clean, compact, and scalable reactors that can provide affordable electricity with far less waste than traditional nuclear plants. It sounds incredible, right? Almost too good to pass up. But here's the thing, investment. When you see a company with this much ambition, you have to step back and ask whether the vision matches the reality. Bold promises don't automatically turn into profitable businesses. It's easy to be swept up in the story of a revolutionary energy breakthrough, but the real question is whether Oklo has the resources, approvals, and timeline to make it happen in a way that justifies its current valuation. Because at the end of the day, it's not the promise that makes you money, it's the execution. Now, let's be honest, energy startups don't operate on the same playing field as a typical tech company. This isn't a new app you can launch in 6 months and then iterate as you go. This is nuclear technology. We're talking about one of the most highly regulated, expensive, and politically sensitive industries on the planet. Every step requires approvals, compliance with safety standards, and billions in upfront costs before even a single watt of power is generated. If history has taught us anything, it's that timelines almost always stretch. Budgets almost always run over, and delays are the norm, not the exception. Oklo's ambitions are exciting, but excitement doesn't erase reality. For investors, that means bracing for potential setbacks and being honest about the fact that this isn't going to be a quick or smooth ride. There's always the possibility that Oklo's progress takes years longer than expected. And in the stock market, time and uncertainty can crush value if investors don't stay grounded in what's actually happening versus what's being promised. And then there's the hype factor. Right now, Oklo is generating buzz because it represents the kind of futuristic investment people want to believe in. Clean energy, nuclear innovation, a path to solving one of humanity's biggest problems. It's a storyteller made to catch headlines and fuel speculation. But here's the reality. A lot of that enthusiasm is based on potential, not current results. When you look under the hood, you don't see robust profits, proven deployment at scale, or consistent revenue streams. What you see is hope. Hope is powerful, but it's also dangerous when it drives stock prices higher than the fundamentals justify. This is the exact situation where investors can end up paying for hype rather than substance. The market loves a good story, but you can't build your portfolio on stories. You need evidence, results, and a track record. Right now, Oklo has more of the former and less of the latter, and that's something every investor needs to acknowledge. So where does that leave us? It leaves us with a balance between risk and reward. On one hand, Oklo could become a defining company in the energy space, and those who got in early might see life-changing returns. On the other hand, investment. This is a company facing massive challenges, long timelines, and real uncertainty. For most investors, that means treating Oklo as a speculative play, not a core holding. This isn't the kind of stock you load up on with your retirement savings. It's the kind of stock you size carefully, fully understanding that you could lose a large portion of your investment if things don't work out. But if it does work out, the upside is enormous. That's the reality of high risk, high reward investing. It's not about avoiding opportunities like this altogether. It's about knowing how to position yourself so that even if the dream doesn't materialize, you're still financially secure. Because the worst mistake you can make as an investor isn't missing out on the next big thing. It's betting too heavily on something that was too good to be true. When you first hear about Oklo investment, the story almost sounds like something out of science fiction. A small modular nuclear reactor that can provide reliable investment, clean energy at a fraction of the cost, and with far less waste than traditional reactors. It's the kind of breakthrough that makes you stop and think about just how different the future could look if it actually works. Imagine communities powered by compact nuclear units instead of sprawling coal plants. Imagine businesses and data centers running on a steady stream of clean energy without the volatility of fossil fuels. Investment. And imagine a world where energy independence isn't just a dream, but a practical reality. That's the kind of picture Oklo is painting, and it's no wonder investors are drawn in. On paper, the company is addressing two of the biggest challenges we face today, the need for sustainable power and the demand for scalable solutions that can keep up with growing consumption. It's not just about creating another option. It's about changing the entire equation of how we produce and consume energy. But here's where things get interesting. The bigger the promise, investment, the more you need to question whether the vision can realistically be delivered. Because what looks flawless in a pitch deck doesn't always translate in the real world. Nuclear power has always been both fascinating and controversial. Investment. While it's one of the most efficient and powerful energy sources we know, the hurdles surrounding safety, regulation, and public perception are massive. Oklo claims to have solved many of those issues with a design that's not only safer but also more efficient. Yet, until you see these reactors operating at scale and delivering consistent results, it's still an idea. Investment. The question for investors is whether you want to buy into the idea at this stage or wait for proof that the vision has legs. This is where discipline comes in. A story this compelling can make you want to rush in, but smart investing means asking if the fundamentals line up with the excitement. Oklo is offering a dream of clean energy that could transform industries and economies, but dreams are only as valuable as their execution. Investment. And that's why before you get carried away, you need to ask yourself if the story is enough to justify the risk. When you look at a company like Oklo, it's tempting to think of it the same way you'd think about a tech startup. A small team with a big idea ready to disrupt an industry and scale quickly. But this isn't software and it's not e-commerce. This is nuclear energy, and the reality is far more complicated. Developing this kind of technology requires years of research, massive amounts of capital, and most importantly, layers upon layers of regulatory approval before even the first reactor can go online. You can't just build a prototype in a garage and test it out. Every step is monitored, every safety standard must be met, and every delay costs time and money. That's why historically, energy startups, especially those in nuclear, don't move at the same pace as a typical high-growth company. They move slowly, and that slow pace can be brutal for investors who expect quick returns. Think about what Oklo is trying to do. They're not just building a product, they're trying to reshape an entire industry that's been stuck in the same model for decades. That kind of ambition requires not only technical breakthroughs, but also government approval, public trust, and financial backing that can withstand long stretches without revenue. If any one of those pieces falters, the whole timeline gets pushed back. Investors have seen this before. Companies with exciting visions that get stuck in endless development cycles, while costs pile up and confidence fades. The risk is that by the time the technology is finally ready, the market has shifted. Competitors have advanced, or investors have already lost patience. This is why it's important to separate excitement from reality. The vision might be world-changing, but the path to get there is anything but straightforward. Startups in this space often burn through capital long before they reach profitability, and unlike consumer tech, they can't pivot quickly to a different model if things don't work out. The very nature of nuclear energy makes it rigid, slow, and heavily dependent on forces outside the company's control. For investors, that means looking past the story and focusing on whether Oklo has the resources and resilience to survive the long haul. Because it doesn't matter how incredible the promise is if the company can't endure the grind required to make it real. Right now, so much of the conversation around Oklo is fueled by excitement. And that excitement has a way of spilling over into the stock market. Investors see a company with a bold vision, headlines start to circulate about clean nuclear energy being the future, and suddenly everyone wants a piece of the action. That's when the line between fundamentals and speculation gets blurry. People aren't always asking whether the company is profitable, whether it has consistent revenue, or whether it's proven its technology at scale. Instead, they're buying into the story of what it could be one day, and that's where the risk starts to build. When hype becomes the main driver of a stock's value, it creates a situation where the price doesn't reflect what the company has achieved, but rather what people hope it will achieve. We've seen this play out in countless other sectors. A new technology captures attention, investors rush in, investment, and valuations climb far beyond the actual progress being made. Then, when reality sets in, delays, setbacks, or disappointing financials, the stock takes a hit, and the people who bought in at the peak are left holding the bag. That's the danger of hype-driven investing. It's not that the underlying idea is bad, or that the company doesn't have potential, but the timing of when you buy matters. If you buy purely because of momentum and enthusiasm, you're essentially betting that other people will keep the excitement going long enough for you to profit. That's not investing, that's speculation, and it can turn quickly. The key is to strip away the noise and look at what's really there. Does Oklo have contracts in place, proven deployments, or steady cash flow? Or is most of its current value tied to the promise of future breakthroughs? Investment. Those are very different things. A stock built on fundamentals has a foundation to support its price. A stock built on hype is fragile, and when the buzz fades, so does the value. Investors who recognize that distinction give themselves a better chance of avoiding painful losses. Because while a compelling story can move markets in the short term, it's the hard numbers that determine who wins in the long run. When you look at Oklo from an investment perspective, it really comes down to managing risk against potential reward. On one side, you have a company aiming to revolutionize nuclear energy with a model that could completely reshape how power is generated and consumed. If they succeed, the upside is enormous, not just for the company, but for early investors who believed in the vision before it became reality. This is the kind of scenario that makes people dream about getting in on the ground floor of something historic. But on the other side, you have to weigh the very real challenges. Building nuclear reactors is expensive, approvals take years, delays are almost inevitable, and the cash burn required to stay afloat during those years can be overwhelming. For many companies, that combination of pressure ends in failure long before success is achieved. That's why balance is critical. You can't just look at the potential rewards without acknowledging the risks, and you can't let the risks blind you to the opportunities. The smart approach is to treat Oklo as a speculative position investment, something that belongs in the part of your portfolio reserved for high-risk bets, not the part meant to fund your retirement or protect your financial stability. It's the difference between investing money you can afford to take a chance with and risking the money you depend on. One is a calculated risk, the other is reckless. And in this case, reckless investing could mean losing a lot if things don't go as planned. It's also worth recognizing that the payoff, if it comes, likely won't come overnight. This isn't a short-term play where you see results in a quarter or two. Investment. This is the kind of investment that could take years, even a decade, to materialize. That means patience, discipline, and the ability to stomach volatility along the way. If you're not prepared for that investment, it's better to stay on the sidelines than to put yourself in a position where short-term swings push you into bad decisions. In the end, Oklo could absolutely become a game changer, but the path there is uncertain and filled with obstacles. That's why the smartest move isn't to avoid the opportunity altogether, but to approach it with clear eyes, realistic expectations, and a strategy that ensures your financial security no matter which way the outcome falls.